Hi there, traders. This is Brad Gilbert with today's trading action. All right, US inflation numbers come out pretty much as expected, right? And the market didn't really know what to do with it. And if you look at the price action on the major currency pairs, it was a little bit confusing. As you can see, the price action, a dip in the dollar and then a rally straight back. So you saw this behavior across most of the instruments, and it's still in a situation after these big numbers. It usually takes a little bit of time to work out what's going on. Now, the numbers weren't like weaker, right? So I can't see the dollar trend sort of changing just at the moment, right? We've seen obviously a dip down. It's below the trend line, but I think that the next 24 hours will give us a bit more of an indication of what the dollar's going to do and where the market's going to go. What we're talking about is we're waiting for the big players, big fund managers to either change their allocation of where they've got funds or not, right? The dollar against the yen is going down. There's a lot of speculation around the BOJ and when they may raise rates. Like, it's not like the BOJ know what they're doing. They're just sort of winging it. But it's enough to get the dollar moving downside against the yen, right? And you're looking at the dollar block. Well, euro had a nice little move topside. We're back at support levels, right? We've had a bit of a clean out. Euro, sterling, Aussie. We had, say, better Aussie employment numbers, and it's lower, right? So it's about 40 points lower. So that tells you a bit about what's going on with the US dollar. It is still strong, in particular against the Aussie, Kiwi, and CAD for that matter. Now, whilst I think of it, before I go into the numbers, I was just checking the daily charts, right? Just check out this dollar CAD long-term chart. Now, dollar CAD's had a great run to the top side, and it is sort of just popping through. Now, let me just correct that low. You can see here, it is looking ready to give up some gains here, right? We've seen CAD weakness for some time. Oil has, rallied from, well, $69 to almost 81, right? So that's a pretty good rally in oil, right? And that's going to take dollar CAD lower, right? The CAD or Canadian dollar appreciates with oil increases. So that's something to keep an eye on for me. It just sort of stands out as a bit of a good trade because dollar CAD has had an easy breezy sort of run to the top side. Now, today, what have we got? We got some final German inflation numbers, but once again, it's time for sterling to shine. We've got the GDP estimates, the services data, and the manufacturing output numbers there as well, right? So there's like three different levels of data here. It can be quite hard to decipher what the hell is going on. And don't forget, you actually also got these construction numbers. So sterling is going to be in play big time. It's a matter of trying to work out where everything is. At the moment, for me, like we've had the clean out on the top side of sterling and the dollar block, and it looks ready for a downside move. So to me, weaker UK numbers fits in sort of quite nicely with the overall movement of the currencies. It doesn't really fit in with the oversold situation, but as you know, when we have fundamental releases, it's sort of like a clean slate on the stochastics, right? So that's something you have to factor in. Don't just look at the momentum because momentum can shift very quickly with these numbers. Now, global markets, okay, US interest rate yields slightly lower than where they were like a day or so ago, right? Just with that pause in inflation. Equity markets slightly down, the US equity futures. We do have a bit of a risk-off sentiment. Pressure on euro, sterling, Aussie. Dollar CAD, dollar, and the dollar index up. The safe havens, right? Still sort of trying to work out what the play is here. Now, with yen appreciating, Swiss probably goes with it. So we've got a bit of deciphering to do with the market because when you look at the various instruments, just with the clean out ahead of the US CPI numbers, then the number comes out sort of as expected, which is sort of strong for dollar. It sort of changed the shape of the technical structure a little bit. But as far as the interest rate plays go, 97% chance of no change by the Fed. Well, we sort of knew that. Whilst the ECB are going to be cutting, and it's a matter of keeping up with the dates, right? So it's where are we? 16th of Jan. You're looking through the next level here. I mean, the Bank of Japan is on the 24th. Okay, hike, 78% chance. We'll see how that plays out. You know, the Bank of Japan promise a lot, but they usually under deliver. And that's pretty much it. Cut 66% for the Aussie RBA. The RBA is lagging insofar as cutting rates, but the rest of the central banks, right, we're in a nice orderly pattern here. Everything's going by 0.25, except for the RBNZ. Their economy is so small, it takes a lot to get it going, right? And that's why they're going to be cutting aggressively. So right now, what do I think? Well, you know what? I think the dollar still, I can't see those US numbers changing anything. If anything, you know what? You could be potentially getting ready to sort of update your charts, include that new little dip on your support levels, and then it gives a bit of a different complexion, right? You don't think it's breaking down. We've actually just got a new low, and it reignites the move in the dollar to the top side, right? So to me, we've got some good levels here. Euro, sterling, Aussie, Kiwi to be selling. We just need a fundamental driver, and that's where it comes into play with sterling today, right? Weaker sterling numbers will drag Euro, Aussie, and Kiwi down, right? That's the way it works. All right, guys, have a good one. All the best. Cheerio.